Hey guys, welcome back to the channel. This is Future Trading with Mike, and today we're going to be looking at. I'm going to show a couple of examples, and the examples I'm going to show are areas and things to look for when it comes to identifying the rejection and what you should be looking for to take a trade. Okay, based on just a simple pullback strategy. But today the markets are actually have a early closure, so they close at 1 Eastern, that's 12 Central. And so this is going to be more, I guess, educational, informational to, those individuals out there that may be in seek of this information or have a question about it. I did get an email, and I answered the individual's question, and they thanked me on it. So I said, well, let me go ahead and just, make this publicly also, so that it maybe if that individual's got has that same question, has a question, and maybe somebody else has that same type of question. So his question was more so, I guess, about equality, rejection, looking for what qualifies as a rejection. What am I looking for? And we're taking a look at instances on the 12 range and the 4 range. So what I show that individual is more so an area off the 12 range and then going over to the 4 range and then looking for the actual rejection. So it was marking a zone off of the 12 range like I do, which I tell you guys, my 12 range is my anchor chart, which I mock up my levels as well as the zones I'm interested in according to price action. I'm a price action trader. So if this is your first time watching one of the videos, guys, and you have not subscribed to the channel, go ahead and take the time to hit that little red button, that subscribe button, and there's a little, I guess, bell icon shaped bell there. That's the post notification. That will just pretty much ensure that each time I post a video that you'll get it'll be sent to you via your mobile device, your email. It just ensures that you will instantaneously receive notification of the new video I drop out or push out. And if you've already subscribed to the channel, I always like to thank my subs. Thank you guys who have subbed to the channel already, been watching the videos, been liking the videos. I appreciate that. Everybody trades different, their strategy is purely different. So, don't get caught up on, however I trade, it may not fit your style. So if it doesn't, then maybe the content's not for you. Maybe you are a position style trader. Maybe you're looking to take bigger trades. Maybe you're a swing style trader. You want to learn that, I'm intraday, I day trade, I'm in the market on a setup, I wait for the setup, I get into it, and then I wait for the next setup. So I like to take a few trades a day and then be done with it, okay? Some people like to get into a trade and hold a position for a longer period of time. If you do so, then this is probably not the content for you because I trade not the higher time frame charts. Like some people may trade off a 30-minute chart. Some people may trade off of a, I don't know, maybe you trade off an hour chart. If you trade off an hour chart, then you're looking at, probably a 4-hour higher time frame chart, and possibly looking at the daily as well. So I'm an intraday trader. I'm a scalper. So I take a higher time frame like the 1-hour chart to gauge, give me an idea of what the market's trying to do, and then I start tapping into my anchor chart, my 12 range, which I primarily spend most of probably 95% more time on that chart because that's the chart I actually mark my levels up from, and then I look at the 4 range as well as more so on my entry chart. So let's go ahead and jump into the video. This is letting you know a little bit more about diving deeper into the strategy itself, and let you know inside my mind of what I look for and how I trade. I discuss this pretty much in each one of the videos, and I don't think people take the time to go back and they see a video and then that I publish publicly here on my channel, and then they turn ask a question when there's so much the same question they may have. I've answered it probably 10 times, in different videos, and so reiterating the strategy, reiterating how I trade, showing you, giving you examples, showing you my live trades and discussing the trades as well. If that's something I have to do daily, that's fine because I don't mind beating that dead horse to death because it will help someone along. So let's look at a couple examples, okay? And I'm going to show you the example that I showed this individual. and we're going to be looking at a level right here. So you see this rectangular area, see where it says long at, okay? Basically, when the market was pushing, scroll over to the, bring it over to, shift it over to the right a little bit, pushing to the downside, making lower lows and lower highs. First of all, let me stop there. Let me say this. If you're looking to trade, and I say this in a lot of videos, learn market structure. Because you cannot start and think that you can start today and trade tomorrow without learning market structure. If you do not know anything about market structure, you need to learn, okay? It's the most important part to trading is market structure, okay? Because you have to understand, basically in a glimpse of an eye, looking at the market from a higher time frame, what the direction of the market possibly, and what the market's trying to do, and understanding the ebbs and flows. Looking at the market, breaking highs or breaking lows, breaking through highs or breaking through lows. You have to understand market structure. Let's move forward. Okay, so basically, price was making lower highs and lower lows. Okay, and you see these lines here. These lines are just dictating, or just showing lower highs and lower lows, pretty much. Okay. Well, that's not the area I wanted to talk about as one of the examples. I was just showing currently, if we look at short, short trend or short, this is from a short-term time base, what's going on in the market right now. The market was pushing lower on this particular day at this particular time, and I believe this was Friday's price action. Yes, Friday's price action. Okay, so price hits a low. Okay. If you go back and scroll back on your chart, then you're going to see that's probably an area of support. The price is bouncing off of, right? Okay, so when price is bouncing off that area of support on a higher time frame, okay, and it could be just right at a swing level. It could be price pulling back to an area of demand, because I mentioned this time and time again. Price will come back to an area of support, right? And it will hit the area of support without sometimes pulling all the way back into the area of the swing, which is demand, say for instance, and then moving or busting to the upside from there. Okay, sometimes you won't get that. Sometimes price will pull back right to the area of support and then take off. Okay, you guys got to understand that the market's not always going to do exactly the same thing every single day. If we all thought that and we all follow that same pattern, we'd all be rich. Okay, but that's not how it works. All right, so the market pushes higher right here. Okay, this is where when I see price reacting at an area of support or even resistance, more specifically, price pulling back to an area of demand. Okay, demand is where lots of buying took place, out of a swing. Okay, so when I see this and then I start to see price rejecting, bursting to the upside, green candle, green candle, green candle, green candle, that means a lot of buying on this area that came from an area of support, bounce off an area of support. Then price starts to break structure. What does structure mean? Structure means, as I just said, lower highs, lower lows, lower highs, chopping to the downside. Now price is turning around, breaking structure back to the upside. Pushes up, pulls back, boom, pushes higher. Okay? All right? Now, when price pushes higher here, okay, meaning making structure and breaking structure, pushing up, pulling back, taking out this high here, taking out market structure to the left of it, okay? Meaning making higher highs and higher lows, okay? Made a high right here, came all the way up here, made a high right here. Before turning back around, okay, and swinging back to the downside. When it starts swinging back to the downside, we have to start looking for areas. Areas where price could actually bounce at, reject that, okay? So we're looking for support, all right? So I saw price moving back here, right? Okay. As it came back to this area right here, all right? And this is where the volume profile comes in hand too, all right? And we're going to go from the 12 range to start noticing more defined the area off the, looking for the actual rejection off the 4 range, okay? So price comes back to an area, the swing right here to the upside, which is support. But not only does it come back into the area of support, here's the swing to the upside, push up, pull back, push higher, okay? That's the full swing. Did it bounce right here at the top end of the swing, right here in this area? No. It actually pulled back a little lower, okay, within the swing, which is pulling into the area of demand, okay? So I'm interested when I see price reject out of this area. That's why I have it marked long right here, okay? So it pulls back into the area of demand, all right? So if I'm trading purely off the 12 range chart, I want to see price if it rejects this area, close green candle to the upside and breaking right back above. I'm going to say, me, honestly, I'm in at 43.33, okay, long. Now, you got to be careful because, just as well, because you have area of resistance right above us, okay, this little swing to the downside. So, you know, that's why I scalp, because I know if I scalp here, my trade entry, I can get in at 30, what did I say, 34, let's see. Yeah, primary 34, 33 and a half. I get in to close at that green candle right there, which is right at 34. And I can take the trade right up to this area here, pretty much to this back up to this little swing high right here. And, you know, that's 34, back up to 37, 38 area. That's 4 points. That's 3 to 4 points on one trade, okay? One contract, you trade one contract, 2 contracts. If you're a beginner, I would highly advise you just, and you have a small account size, to trade one contract until you can grow your account size, okay? But that's if I'm purely trading off of the 12 range chart. Now let's go over the same area. You're going to see it on the 4 range chart, okay? So that was at around 335 on, excuse me, Friday. Sorry about that. All right, so we pull up the 4 range now, kind of side by side. You see it here? Same area here, same area here. This is why I have W marked here. I've said this tons of time in the past, guys. So if this is your first time watching a video, please go back and watch other videos on the channel before you start asking questions, because I have answered those questions many times, okay? So what is a W structure? W structure to me, does it mean, what does it stand for? Win? Yeah, it does stand for win for me, because most times when I see the area of rejection and I marked it, I mean, you got to look for confluency, okay? That's why here, price pull back to our area of support, okay? In area of support, I'm looking for, you know, is it matched up or paired up with the high volume area? Yes, it is. Pull back to a high volume area. Typically, you want to see it kind of pull back a little lower than the high volume area. Kind of like, I'll talk about this, the lower extremity of the high volume area. But sometimes price will bounce right at a high volume area. So you can't always think that price has to do this every single time in order for it, you know, to, you know, look for a rejection or get into a trade. Guys, you can wait patiently if that trade doesn't make any sense to you and you want to follow the rules 100, you know, be a stickler on it 100%, then that's fine. You know, you may miss some opportunities, but that is fine, okay? That is fine. So anyways, getting back over to the 4 range. So look at the 4 range. All right, so price is back into the hitting the zone. The same zone here is the same zone that I have marked on the 12 range chart, okay? Blow it up. Now, those who had followed some of the other videos prior to, this is that area right here, guys, okay? So price, this is on the 4 range. This is what that swing looks like on the 4 range, okay? All right, so price comes back into it. That same swing that's on the 12 range, here it is on the 4 range, okay? So you're going to see more action, a lot more, you know, price action going on the 4 range because it's a lower time frame, you know, than the 12 range. So price taps back into that area, that zone there on the 12 range, all right? What happens? Look for the W structure. What does W mean? All right, so I want to see basically price do the same thing as I told you on the 12 range, okay? Break the structure, all right? Price taps into the zone that I showed you that I marked up on the 12 range, the same area. Hits it, okay? Pulls down, pushes up, pulls back, boom, W structure. But I do not take the trade right as soon as it makes the W structure. You always want to wait for price to come back to the W structure on the pullback. So mark the zone on the 12 range. We flip over to the 4 range. We look for the W structure. We're going to go along. What does the W structure tell us? The W structure tells us that price is clearly rejecting that area, that zone, that area of support off the 12 range, which is your anchor chart, my anchor chart. You don't have to use, you guys don't have to use 12 range. You use whatever chart you like to use, okay? So price rejects the area, okay? I want to start seeing it breaking structure as after it's broken that, or made that W structure. It breaks structure here. This little swing right here, these little highs right here, it pushes up, pulls back, break structure to the upside. Okay, all right. So at that point, and then it continues making a breaking structure to the upside, pushes up, pulls back, breaking structure here, breaking to the high, pushes up, pulls back. It taps into this swing right here, rejects it. It pulls all the way back where you want to see price pull back to the W structure. It pulls back to the W structure, which is the area of support off the 4 range. At this moment here, hey, once I see price break, permanently break right back above 40, 43, like I said, 34, you see it here? I'm telling you the same thing. Right here. Again, I said 44, 34 on the 12 range, right? Same thing. Look for the W structure. This is what classifies and I guess really clarifies and qualifies the actual rejection, the trade itself. If you're looking for the rejection. W structure on the 4 range, pull back to the W structure on the 4 range. After it's breaking structure on the 4 range, meaning breaking market structure and then swinging up and then pulling back, okay? When I see that happen, price pulls back to the W structure and price breaks right back above that green candle, above 40, 43, 34. I'm long back up to the high right here. You get it at 34, what did I say? You take it up to 37 or 38. That's 4 points right there, okay? It's that simple. That simple. That's one example, okay? Hope you guys understand that. I mean, it's simple as that. I mean, you're looking for rejection. Rejection, you're looking for that confirmation, okay? I'll mark the area, like I said, on the 12 range. Then I'll switch over to my 4 range, and you're looking for that confirmation. That confirmation, if you don't know how to get off the 12 range, wait for that W structure on the 4 range. Wait for it to show you purely rejection on the 4 range, and wait for price to come back to that W structure to take that trade. Okay, so we'll look at another example here. This is on a short entry, okay, and I have it marked up already off the 12 range, okay? So let's scroll this over here a little bit. Blow it up a little bit so you guys can see it. All right, here's the area right here, okay? Let's explain, okay? I mentioned price swinging to the downside, right? Making lower highs and lower lows, right? All right, so price pushes down, pulls back, makes a lower low, okay? Now, something must be here. Down here, price is bouncing off an area support off a higher time frame. You can see it off the 1 hour right here, 44.34. Price is bouncing right there. But if I was to scroll back on the 12 range, you can see it. But if you go to a 1 hour time frame, you'll be able to see where price is bouncing off an area support. And then it turns back around. It doesn't really turn back around, breaking structures back into the out. It does break structure to the upside. Making swings back to the upside here, but it doesn't take out, what I call market structure, meaning structure to the left hand of price action. Price turns back around, starts pushing higher. Here's the left hand, the left side. If you look from what's going on here to here, left side, price is not breaking the highs right here. So basically, this is a pullback, okay? So when I saw price breaking lower, pulling back, breaking lower, bouncing off of area support, okay? Then it turns back around, starts pulling back. Now, here's the thing. Price could have bounced, could have rejected and bounced like right here, okay? But when price pushed higher here, it actually took out this swing right here, all right? Okay? It took out this swing right here. So that made that invalid, okay? I'm looking for a zone to where I could trade, take an entry from on a pullback, right? Well, I'm not only just looking at the area over this big area of resistance right here and it's swing to the downside, but I'm looking at, okay, within the area of resistance, where is the supply at? Meaning, where does more selling take place within the swing? And most times, if you look, like price swung to the downside here and pulled back, right? That means buyers start pushing the market back up, whatever the case is. Sellers start stepping back in on the initiation, the originate, where selling took place here, more selling took place right here. Sellers started accumulating here and pushed the market, driving it lower, breaking the low right here. So anyways, I have something I want to say because I think a lot of people get confused because they just do not understand market structure. So a lot of people, they may have been taught the wrong way, maybe been shown the wrong thing from a so-called guru or whatever the case is. Man, the thing about trading is it's simplistic. Be as simple as you can. You get complex and having all these indicators and if you want to trade a lot of different, trade all that technical analysis stuff, that's fine. I strictly like looking at, the areas of support resistance, looking at maybe even static levels, your half round pivot area levels, maybe even 40, 70 areas. I look at certain levels. I don't outside of just looking at support and resistance swing levels based on price action, looking at swings and things like that. Looking at price reconstruction and returning back to it. Yes, but it's just make it as simple as possible. When you start cluttering your charts up, then you're making a mess. You get yourself confused. You get into bad trades. One bad trade leads to another bad trade. Okay, so I mentioned price pushes down, pulls back, and pushes lower. Yes, I get off topic sometimes, and I start to rant there because inside my mind, it's funny to me because people ask questions that's like, wow. It's like it clearly goes to show me that they really don't understand trading, the markets. They don't understand what's going on. Okay, and I didn't either. At one time, I did not either. At one time, I was just as lost as the next person. It took time, and it does take time. And then one day, you're gonna sit back and you look at your charts and all the information and things you studied, and it's gonna click in your head, and you can be like, "Wow, I see it, clear as day, crystal clear like water." All right. So price pushed through this little area right here, so that makes that little area there, that swing, invalid. So all right, I'm looking for some area back within the area of the swing here that price can bounce out. That's why I marked this area here, this rectangle area here. This here is a zone, okay? It's a zone. It's a level right here, okay? All right? And so price pulls back to the area right here, right? This is supply now. Supply is an area where there's lots of selling that took place or sellers started to accumulate within a swing and then push the market lower, breaking structure, meaning breaking this low right here. Pulls back to that area, okay? At this point, I see green candle followed by a red candle, which to me, that's the first indication of rejection, okay? All right. Now, in order for me to get into this trade, if I'm trading straight off the 12 range chart, then I want to see price break, in all honesty, break back below really 48 to 40, let's see here. 48 and a half pretty much. So on the second candle close to the downside here, you could have went short, but just be mindful because sometimes the moment a candle like this closes, price like to pull back a little bit before it continues to push to the downside. Now here we're at a high volume area. It's not the ideal place, say for instance, because I don't like to see volume like this right here. Typically I see volume like this, I want to see price pull back up to the top end of the volume. But this is a zone. It is an area price can reject and bounce at, okay? All right, here's a little high volume node here. Price pulls back to it, okay? I said this before, price likes to move to a high volume area. If it rejects, back through a low volume area, back down to the high volume area, okay? So it rejected here. I'm in at the close of 48 and a half, okay? 48 and a half, I'm in. No, and I know price can pull back a little bit before it goes back down, goes in my favor because two candles close to the downside for me. Rejection at a high volume area. Price closes, it's going to move through this low volume area and want to move to the next area of volume, which is here. If you look at in size comparison, how large is this area of volume compared to this? This area of volume is a lot greater. So it's rejecting this area here. It's got to want to come back down here, and that's what it does. Now, be careful because we do have an area of support right here. And you see when price pushes down, bounce at this area of support, it's going to come to this area of support, and it's going to pause, reject, before it decides what it wants to do. So if I got in at 48 and a half, I could take price back on down to, say, right here to this high volume node right here, 44. Say 44 and a half. We'll just say it like that. Guys, that's what did I say? That's 4 points. 4 points. Even on one contract is good. But I trade, I typically like to trade two contracts. Okay? So that's a short entry trade. Now if we go look at it from we can look at it from the 4 range chart. I have to find where it's at on my chart here in the 4 range. Because I don't know if I marked that area. What time was that? That was at around 12:15 on Friday. Sorry about that. Go over to that area. All right, so here it is on the 4-range chart. We're looking at the 4-range chart now. Okay, switched over from the 12 to the 4-range chart now. This zone right here is the same zone, that rectangular zone that I marked off the 12 range. Okay, this is pulling back into the area of supply here, which is within the area of this resistance area here, the swing right here. Okay, price pulls back to it. All right, so now I'm here. I'm looking for kind of like an M structure in a sense, to kind of get into a trade. But not only am I looking for just an M structure, I gotta start seeing areas that now that we tap back into the area of supply, the price is actually breaking structure, meaning back, to the downside. So it pulls back, taps into the area of supply. Okay, so now I gotta start seeing breaking structure to the downside. All right, price swings down, pulls back, breaks lower. So it broke this little low right here. Not only did it break this low, but on a swing down, swung down, pull back, push lower. Then it broke the low right here. So it broke market structure here, all right, to the left of it, and then it broke the low as it swung down. Now, when price pulls back, okay, primarily you want to see it pull back. It's pulling back to, its little swing right here. I wanted to see it pull back just a little bit higher, but that's fine though, because we're a few ticks away here on the 4 range, maybe a tick or two, right back into the swing. The moment price closes, pulls back, closes, okay, red candle to the downside. Pretty much, like I said, if you look at it, guys, that's like 43, 48 and three quarters, 48, 43, 48 and a half. I'm short. I'm short back down to primarily this area right here where this swing level is, is that right here, okay? The swing level is right here. And this right here is going to be that same area off the, let's look at it, 12 range, which is the high volume area. Right here. Got it? All right. So you get in, that's like, get in, close of, like I said, 48 and a half. Take it all the way down to pretty much 44 and a half, and you picked up anywhere between 3 to 4 points, guys. As simple as that. Because price is going to move from the high volume area down to this low, back to this high volume area here. That's looking for the rejection there, okay? All right. And we did get the M structure. The M structure or the W structure is not always going to always paint out, with the candles and look like an actual M. Okay, you got to visualize it and be creative with your mind a little bit. See, I'll show it to you off the 4 range. We can see it here. Price pushes up. Okay, pulls back. Okay, forming the M. All right. Pulls back, and then, so it's a funky looking M. Price pushes up, funky looking M, okay? So it is there, it's hard to see. That's just, a method or kind of like a concept to understand. M's for shorts, W's for longs, So what I probably look for is this price to pull back to the area of supply if I'm looking to go short, and seeing the rejection, meaning, all right, it's rejecting on it's tapped back into the area off the 12 range, say for instance, and now it is, rejecting from the 4 range. I'm looking for price to start breaking structure. The moment price starts breaking structure to the downside, pulling back, I'm going short. It's as simple as that, guys. It's as simple as that. So that in itself is example number 2, okay? And that's, purely how you trade it. And something else I'll show you too, like, even when I start scrolling back, I don't have the volume profile right here. So I can use what's called a range profile. I was talking about this, and I think the volume profile video, using volume, setting up the volume profile or which one do I use. If you haven't watched that video, the volume profile indicator I use is from a company called discotrading.com. But anyways, so this right here is what's called a micro range, pretty much. Profile, a micro range profile. I can set these up anywhere on the chart, guys. Like that's just one. See where it says add range profile? I can set these up anywhere on the chart. It doesn't really matter. I can set up over here if I want to. I can set so many up. So it allows me to draw out a mini profile anywhere on the chart in relation to the area that I have of interest. So I drew this out. I'm interested in this swing right here, right? Price pulls back to that area, right? All right, when price pulls back to this area, right up in here was the area right here. Okay, pretty much this area right here. price is at or above a high volume area, okay, on the mini profile, okay. So that gives me confluency or gives me confirmation as well. You know, it's above an area on the volume profile. Typically, the price likes to move from, you know, you wanted to sell at a high point at a higher price and buy at a lower price, okay. So that's, you know, the mini profile in a sense where I can draw out and be particularly interested in any particular area. If I want to just draw this area, that zone, instead of the whole swing, just this area here, then here once again, see? The high volume area for this area where I took interest in this zone here, price pulls back, we're right above the outer edge of the high volume area. Boom! It works, you see? You just have to be able to visually, in your mind, be able to see some things. You have to get creative sometimes, okay? It's not always going to be, trading is not always black and white, all right? So you have to be kind of creative with your mind to be able to see things, okay? So that's that example. All right, this will be the last example. I'm going to show this pretty quickly. All right, so here's price swings down, pulls back, makes a lower low, all right? Makes a lower low, okay? Now, price on the way down, when it pulled back, what did it do? It broke structure. It broke this low right here. Price pulls back, okay? I'm looking for an area, okay? An area of resistance, but more so an area of the area of supply within the area of resistance, you know, okay? An area, okay? So, when price pushes lower, breaking structure here, breaking low, price pulls back, okay? And then within this swing to the downside, we have swings. We have, you know, smaller swings, if you want to say. It's like, you know, more swings, like swing here, pull back, make a low, pull back, makes a low. So within a swing, sometimes you may have, you know, you have micro swings or mini swings within a larger swing. This here is the larger swing, but within this swing, I have, you know, I have swings to the, just as well as swings to the upside, forming this swing to the downside, there were swings to the downside here on the way back down. So I understand that as well. So when I saw this swing to the downside, price breaking this low right here, I looked for an opportunity because I knew price would pull back to an area. We'll pair it up with the volume profile here. Okay, there's an area of resistance right here within the bigger swing to the downside. Okay, so these swings to the downside within this larger swing are what I classify called supporting swings. So when price swung down, broke this low right here, I'm looking for price to pull back to an area of supporting swing, an area of supporting resistance, and it does right here. It pulls within this swing right here, which is a supporting swing within a larger swing. This is resistance within that swing. Okay, all right. Price pulls back to it. Okay, pulling back right above an area, this high volume area here. So, okay, one, it pulls back to a supporting swing or an area swing, a supporting swing of resistance or supporting resistance area within the larger swing. Okay, two, it's above a high volume area. Okay, I'm getting confirmation, confluency there. Okay, all right. So at that point, I'm interested. I'll mark this zone off right here. Okay, I'll mark this zone off. All right. Then we'll take a look and I'll show you on the full range. Now, if I was to get in on this trade, off of the 12 range, I'll show you. Okay, I'm into this trade. I'm taking a trade right off the 12 range. The moment this candle here closes, this red candle to the downside, I'm in. I'm into this trade. Okay, on the pullback as soon as it closes, higher upper end of the high volume area, pulling back to a supporting swing, area of resistance here. Pulls back, closes, back down to the low. You take the trade, that's that, say 43.34 and 3/4 or 34.5. You can take it back on down here to the high volume area or a couple ticks below it, whatever the case is. But still, that is another 3 or 4 points, pretty easy right there, right? Okay, if you hold the trade out, you know, price does some funny things. That you be in the trade and then it pulls back. That's off the higher time frame. So you go over and look at the full range. We'll switch over. What time was this? This was at 12:45, around 12:45 on Friday. So let me go ahead and do this right quick so we can see it off of the 12 range. I'm going to pretty much mark the zone so we can see it on the full range as well. All right. So here it is, right here. This is on the 4 range, okay? All right. So let's take a look at it. Here on the 12 range, here's that area. Let's do this right here, okay? Here it is on the 4 range, all right? Okay. Now let's see if I can draw out a mini profile in particular, okay? This area here. Make sure I got that area right. Sorry about that. Oops. Think up. Let's see what I did here. Messed up. Okay. Yeah. All right. Okay. Here we go. Now, price retraces back, right? Above the high volume area, right here. This is the mini profile. Okay. This is me trading. I guess you want to call it micro range or micro. They're just mini profiles. Okay. I'm drawing off on the 4 range, okay? So I can zoom in on that area that I'm interested in, okay? Which is this block, this rectangular area from here, off the 12 range, all right? So if we look at it from on the 4 range chart, then we want to see what? We want to see M structure, right? Price pulls back to it, taps into that area of that resistance area of supply, okay? Okay, so when price pulls back into that area, all right, here we go. Here's the M. Pushes up, pulls back. Okay? So let's draw it. Boom. Where we at? Yeah, we draw with this. Okay? I always told you the M could be, it's not always going to paint itself. See, but this right here is pretty, it's a beautiful M, right? Look at the M. If you can visualize it, it's kind of like a W, but it's kind of inverted, in a sense. But it is, typically an M structure. So most times you see people like to see something like this when it comes to an M, and that bitty M. But this one kind of tops out a little higher, so it kind of gives you the M structure. Like I said, you have to be creative with your eye, though. Okay, so anyways, that's the M structure, but I knew that was going to be an area where price could actually, an area of rejection. I see that. At the close of, like I mentioned, pretty much, I said, 34 and a half, 34 and a quarter, whatever it was. You get into the trade, so that's primarily price closing right below this area right here. Price closing below that area, okay? So it'll be at the higher end of the volume profile, okay? Right here on the mini profile. Closes below 34 and a half, whatever case is. You get in right here. You take the trade from here back down to the high volume area here, okay? Price moves from a high volume area, upper end of it, to a low volume area, to another high volume area. Boom, what are you picking up? 3, 4 points right there. Simple as that. You just got to be able to mark the zones from a higher time frame, and then from there, you're looking for the rejection off on the 4 range chart. It's that easy, guys. It's not complex. I think people you have to continuously do it over and over and over. If you think you're going to learn this today and do it tomorrow, be able to trade live tomorrow, you can do it if you want to, but I'm going to tell you right now, you better spend some time marking charts, back testing, okay? Because if you do not, you are going to get slammed, okay? You got to be able to, whatever strategy you trade, you got to back test it and make sure it works, okay? All right? Because who wants to be trading and profiting 50% of the time or losing 50% of the time? No, I don't. I want to be on the higher end of things. So that was 3 examples to show you what to primarily look for, okay? And what I look for when I'm trading, the strategy I use is just simple pullback trading to areas of support and resistance. Support and resistance, I say that. But, I don't particularly all the time just trade from an area of support and resistance. As soon as price taps back into that support and resistance, it rejects that area, I'm into a trade. If it rejects right at the neck, if you want to call it that, of support and resistance. When I say neck, I'm talking about swings are kind of set up to me. Like I look at them like body structures in a sense. Like right here, price pushed up, pull back, push higher. This would be kind of the upper end, your head area. The high end of it, the neck end of it, the low end of it. So if price pulls back to the neck end of it, like right here, you see what price pulled right back to the neck end of this swing here to the upside. Yes, it rejected right at resistance, okay? Be mindful though. When price pulls back right to an area of resistance, that is liquidity, okay? I'm gonna show you here, okay? Because the market makers, they like to do that. Pull price right back to an area of support. In this case, okay? Price bounces, and no traders are gonna get in. Traders are gonna put their stop right here below this area here, okay? Market goes up a little bit, you'll be in profit. Most people are going to get out the trade right here, okay? But if you try to hold that trade, then they come back down. Hit that area, stop traders out, push the market lower before turning, before most times they turn it back around. But this example here doesn't play out that way. What I'm trying to get you to understand is just the body formation. This is like the neck, kind of, the lower extremity of a swing, the higher extremity of the swing. So this, I call this the throat or the neck right here, okay? So be mindful, okay, of certain things of what to look for in the market. So if I'm taking a trade right at the neck of a swing, this would be right at the area of support. Yes, I'm not saying, because sometimes the market will do that. Come right back to the neck of the swing right here, bounce, and then push higher and take off. Okay, that does happen. It happens. Okay, but I like to see price come back into the lower extremity of a swing, which is classified as area of demand and supply. Because if you say demand, I'm looking at an area of demand, then that's an area where more accumulation of buying took place. Supply, right here, more accumulation of selling took place. Price pushed down, pull back, sellers started to accumulate, and then push the market, drove the market lower. As simple as that. I'm not going to keep ranting and raving on, guys. I hope you guys, I gave 3 examples. I think that's fair enough. I just want to be more in depth and more in detail. And I hope you guys, find the information that I'm giving out free valuable, the content. I don't know too many people that actually, go into great detail and actually, they may talk about their strategy. I'll trade support, I'll trade resistance, coupled with, looking at the cumulative delta and looking at the volume profile, whatever the case is. But they don't go in detail of actually identifying the intricate details of little things that about the trade itself, about what you should be looking for, about at the area that I marked for supply or demand. What am I looking for as far as rejection? What qualifies as far as rejection? What is it I'm actually looking for? So I have no problem doing that, because it took me some time to get here, and this is the reason why. To me, it's just paying it forward, helping somebody else out. Hopefully they see it. You're not going to see it overnight, but just take the time to go back, review, and then eventually in time it will click. So I hope this video helps someone out there, and give you a better understanding about the markets and what they actually look for, what I actually look for, and the way I actually trade. Not everybody trades the same, so don't knock me for the way I trade. I don't knock anybody else for the way they trade. We all kind of learn and tweak things, and whatever works for you works for you. So I'm going to go ahead and close out the video and get this uploaded so you guys can probably already watching the content. But there's no trading today. I'll see you guys in the video tomorrow. I'll be trading again, my recorded sessions here, and I'll post them to my channels. Just showing you more my entries and how how the strategy that I've learned, and how kind of tweaked it, how it works for me. So if you haven't subscribed to the channel and you found the content valuable, I appreciate it, guys. Go ahead and hit that red button, that subscribe button, as well as hit that little bell icon, that post notification, to ensure you never miss one of the uploads. Like I always say, for those that have already subscribed, thank you. I can't thank you enough. And that's going to be it for today's video. Take care.